begin with who's joining us in our market panel. Marc Pinto of Janus Henderson Investors and UBS Global Wealth Management's Jason Draho. Guys, welcome. Marc, so we touched a new high for the S&P. We're right around those record levels. Big tech names got us here, but you say to look elsewhere from here, and healthcare is one of those spots to look. So what filters are you using to pick those healthcare stocks?
Yeah, so we think there are a lot of exciting things going on in healthcare right now. In particular, this is a golden age in terms of drug discovery and development. Last year alone, 73 new therapies were approved by the FDA, which I believe is a record number. And in this spirit of innovation, a lot of which, by the way, is being driven by artificial intelligence, we see some major historically unmet medical needs being addressed. And the first I would point to is a category, the weight loss drugs, where Lilly in particular, which is a holding we like a lot, has really led the way in this in terms of their drug Mounjaro, which is showing up to 20% loss in weight reduction, and could potentially have very significant opportunities in terms of other classes of diseases that are addressed by addressing obesity. We also like Vertex Pharmaceuticals, which is has basically come up with a cure or treatment for cystic fibrosis, as well as some interesting drugs in development, including a non-opioid painkiller that we think could be as much as a $15 billion a year market. And then finally, in Boston Scientific is another area where we see a lot of innovation in terms of treating cardiovascular conditions.
Nice. Okay, Jason, now zooming out, you point out that macro data has been mixed this year, and actually right now we're getting some data from Intuit's QuickBooks Small Business Index that shows employment in the smallest businesses, those with fewer than 10 employees, actually dropped slightly in February, particularly geographically in the West and Northwest, and industry-wise in logistics and information. I'm inclined to think that that might actually be a sign of healthy efficiency in smaller businesses. So expanding the lens out, how do you see smaller public companies, small caps, faring in this environment compared to the big ones?
Well, small caps are one of our most preferred areas. One of the things that's nice about small caps is that in some way they've underperformed and underperformed significantly. Their valuations relative to large is at a pretty significant discount relative to history. And they're also, relatively economically sensitive. And the thing that we don't think that small caps are properly discounted, what we ultimately think will continue to be a relatively benign macro environment in the U.S. economy this year, with growth around trend, inflation, moving lower, maybe in fits and starts, and ultimately the Fed cutting rates. If that plays out, that's a pretty conducive environment for small caps to kind of catch up. We've seen them outperform and underperform really over the past 4 or 5 months. I think some of that's really predicated on concerns that investors have about just the resiliency of growth. But even if the data has been mixed, it's been mixed at a still relatively elevated level. I think the more investors get comfortable with this soft landing view, this cycle's mixed in for a while, I think you'll see that rotation. And then in the rally that's kind of gone on for the past few months, kind of broadened out in small caps to get a tailwind as a result.